Right now, at this precise moment in history, something is happening to silver that has never happened before in quite this way. Not in 1980 when silver ran to nearly $50 an ounce. Not in 2011 when it briefly touched that same level again. Not in any of the precious metals surges of the past century. What is happening right now is different in kind, not just in degree. And the reason most investors are completely missing it, the reason the majority of people who even know what silver is are not positioned for what is already underway, is not that the information is hidden. It is that the information requires a way of seeing that most people have never been taught. Today, I'm going to give you that way of seeing, and once you have it, you will not be able to unsee it. The opportunity that most investors are missing will become unmistakable to you, and the urgency that every stacker needs to feel right now will become not a fear response, but a clear, calm, confident call to action. I want to begin with a question that I think gets to the heart of everything we are about to explore. What is the difference between a person who builds lasting wealth and a person who spends their life working hard and arriving at the end of it with less security than they deserve? Is it intelligence? Research suggests the correlation between raw intelligence and financial success is weaker than most people assume. Is it education? Some of the most financially successful people in history had modest formal schooling, while many of the most credentialed economists in the world have made catastrophic personal financial decisions. Is it luck? Luck plays a role. No honest person denies that. But luck is not the thing that separates the people who build genuine, enduring wealth from those who do not. The thing that separates them is something both simpler and rarer. It is the willingness to see what most people refuse to see, to look honestly at the world as it is, rather than as the consensus says it should be, to act on what honest analysis reveals, even when that action feels contrarian, uncomfortable, and socially isolated from the people around them. That quality, the quality of clear, honest, courageous seeing, is the one that every genuinely transformative investor has demonstrated throughout history. And it is the quality that is most urgently needed right now by anyone who's watching the silver market with serious attention, because what is happening in silver right now is being seen clearly by a very small number of people, and missed completely by an enormous majority. The gap between those two groups is closing. When it closes fully, the opportunity that currently exists will be history, and the only question that will remain is which side of the recognition you were on when it happened. Let me take you to a specific place and a specific moment that I think illuminates, with unusual clarity, the nature of what we are experiencing right now. The year is 1999. The place is a conference room in a building in Omaha, Nebraska. The person we are watching is a man who, at this point, is already widely recognized as one of the greatest investors in history, but who is about to do something that most of his admirers will find baffling, and his critics will use as evidence that his legendary judgment has finally failed him. Warren Buffett, through his company Berkshire Hathaway, is in the process of purchasing 111 million ounces of physical silver. Not a silver ETF, not a futures contract, not a paper claim on silver held somewhere in a vault by a counterparty whose solvency he would be trusting. Physical silver. Delivered, transported, and held in vaults under his direct control. 111 million ounces. At the time, that represented approximately 30% of the world's entire annual silver production. The financial press was confused. The analysis community was divided. Gold bugs were delighted, skeptics were dismissive, and Warren Buffett, who almost never explains his investment decisions to the public, offered a rare and specific explanation for this one. He said, essentially, that silver had been in a supply deficit. That demand was exceeding production, and that the fundamentals of supply and demand, applied with patience, would eventually produce the price appreciation that those fundamentals demanded. He was not making a monetary argument. He was not predicting a currency crisis. He was simply reading the supply and demand data honestly, concluding that silver was undervalued relative to those fundamentals, and positioning accordingly. He bought, he held. He eventually sold in 2006 at a profit, though he has since said, characteristically, that he sold too early. Because after he sold, silver continued to rise dramatically, reaching nearly $50 an ounce in 2011. The lesson I want you to take from this story is not that you should copy Warren Buffett's every move. The lesson is that supply and demand fundamentals, applied with patience and conviction, produce results. That the most rational investor in the history of modern finance looked at the silver market in the late 1990s, saw what the data said, and acted on it without regard for whether it fit the consensus narrative of that moment, and that the data available to you right now, the supply deficit data, the industrial demand projections, the monetary dynamics, the above-ground stockpile depletion, is not weaker than the data Buffett acted on in 1999. It is substantially stronger. The argument for silver today, on pure fundamentals, is more compelling than it was when one of the greatest investors who ever lived decided it was worth 111 million ounces of his company's capital. So let me lay out, with precision, exactly what most investors are missing. Not vaguely, specifically. Because the gap between what the data shows and what the mainstream investor believes is the exact size of the opportunity. And I want you to understand that gap completely, because understanding it is what allows you to act with the calm conviction of someone who knows why they're doing what they are doing, rather than the anxious reaction of someone responding to a headline. What most investors are missing is the convergence, not any single factor. Individual factors in silver have been compelling for years. What is different right now, and what makes this revaluation ultimate rather than merely significant, is the simultaneous arrival of multiple independent forces, all pointing in the same direction, at the same moment. It is the convergence that makes this different. And it is the convergence that most investors, who tend to evaluate assets through the lens of a single factor, a single thesis, a single narrative, are structurally incapable of seeing. Let me show you the convergence piece by piece. The first piece is the monetary force. The global monetary system is under the most severe structural stress it has experienced since the collapse of Bretton Woods in 1971. Global debt has reached levels that are mathematically irrepayable in real terms. Central banks that spent over a decade printing money at historic rates are now caught between inflation that requires tight monetary policy and debt burdens that require loose monetary policy. There is no clean exit from this trap. The resolution, when it comes, and it will come because mathematics is not optional, will involve either a deflationary collapse that destroys paper asset values broadly, or an inflationary resolution that destroys the purchasing power of paper money specifically. In either scenario, physical silver, real, tangible, held metal, is one of the few assets that has historically preserved or increased its purchasing power. The monetary force is pushing silver upward. The second piece is the industrial force. Silver is the most electrically conductive metal on Earth. That is not a marketing claim. That is a physical fact. And the 21st century's most urgent technological priorities, clean energy generation, electric transportation, advanced computing, medical technology, all depend on electrical conductivity in ways that are expanding, not contracting. The solar energy industry is the most dramatic example. Each solar panel requires a meaningful amount of silver, and the global ambition to replace fossil fuel energy with solar is a commitment to install hundreds of millions of solar panels in the years ahead. The math on silver demand from solar alone is staggering. The electric vehicle build-out adds a separate additive demand stream. The semiconductor industry adds another. Medical devices add another. These demands are not alternatives to each other. They are simultaneous. They are all growing. And the silver mines of the world are not producing more silver. They are, by most current data, producing less than they were a decade ago, as the highest grade deposits have been depleted, and new discoveries have not kept pace with depletion. The industrial force is pushing silver upward. The third piece is the monetary recognition force. And this is the piece that most investors miss most completely, because it requires a kind of historical imagination that is genuinely rare. Silver was money for 6,000 years. It was demonetized in the 20th century. Removed from its monetary role through deliberate policy decisions by governments that found a money supply unconstrained by physical metal much more convenient for managing the debts they were accumulating. But demonetization is a policy, not a law of physics, and as the fiat currency system built on that demonetization approaches its structural limits, the question of what restores monetary credibility in a post-crisis world is being asked openly by serious economists and policymakers for the first time in decades. Any scenario in which silver is restored to even a partial monetary role, in which it functions not as everyday currency, but as a reserve asset, a monetary anchor, a component of a reformed international monetary system, would produce a price revaluation that makes every other factor in this analysis look modest by comparison. This is not the baseline scenario, but it is no longer the unthinkable scenario. And the distance between unthinkable and possible is where the most extraordinary investment opportunities in history have always lived. The convergence of these three forces, monetary, industrial, and monetary recognition, is what makes this revaluation ultimate, not just significant, not just historically notable, ultimate. The kind of revaluation that, when it is fully played out, will be studied in financial history books as one of the clearest, most well-supported, most thoroughly telegraphed opportunities that the majority of investors somehow managed to miss entirely. Let me tell you about someone who did not miss it. His name is Keith Neumeyer, and he is the founder and chief executive of First Majestic Silver, one of the largest primary silver mining companies in the world. Neumeyer has spent his career quite literally underground with silver, understanding its geology, its extraction, its costs, its supply dynamics from the inside of the industry that produces it. And for years, he's been making a public argument that has earned him both enormous respect among serious precious metals investors and occasional ridicule from mainstream financial commentators. His argument is this: silver's price, as set by the paper futures markets, does not reflect the real-world supply and demand dynamics of the physical metal. The paper market for silver, in which hundreds of times more silver is traded in a single day than is actually mined in a year, has historically functioned as a price suppression mechanism, keeping silver's price anchored well below where physical supply and demand fundamentals would place it if the market were operating purely on physical reality. Neumeyer has argued for years that the disconnect between paper silver pricing and physical silver reality will eventually resolve, violently and rapidly, when the physical demand for silver becomes so intense and the above-ground physical supply so depleted that the paper market's ability to set the price is overwhelmed by the physical reality it has been ignoring. This is not a fringe argument. It is supported by the documented supply deficit data, by the accelerating drawdown of warehouse silver inventories on the major exchanges, by the increasing frequency of delivery failures and backwardation in silver futures markets that signal physical tightness. The paper market has been setting silver's price. The physical market is increasingly disagreeing, and when physical markets and paper markets disagree long enough and sharply enough, physical reality wins. It always has. It always will. Understanding this dynamic, understanding that the silver price you see quoted on a screen right now reflects a paper market that has been systematically disconnected from physical supply and demand reality, is what transforms your understanding of the opportunity. The price you see is not the price that physical fundamentals support. The gap between those two numbers is the opportunity, and the closure of that gap, which the confluence of forces we have described is actively, measurably producing, is the revaluation, not a gradual drift upward, a structural, fundamental, unavoidable repricing of physical silver to reflect the world as it actually is, rather than the world as the paper market has been pretending it is. Now, I want to talk about what stackers specifically, the people who have already built physical silver positions, who have been on this journey for months or years, who understand the thesis at a level that most people around them do not. What stackers need to do right now that is different from what they have been doing. Because the actions appropriate to the accumulation phase of a precious metals investment journey are not exactly the same as the actions appropriate to the recognition phase. And I believe we are transitioning from one to the other in real time. In the accumulation phase, the primary action is buying, consistent, patient monthly purchasing of physical silver, building the position ounce by ounce without regard for short-term price volatility, with full attention on the long-term thesis. That phase has served you well if you have been executing it. The ounces you accumulated during the accumulation phase are the foundation of everything that follows. In the recognition phase, the phase we are entering, the primary action shifts from building the position to completing the architecture around it. There are 5 dimensions of that architecture that every stacker needs to assess and address right now, with the urgency that this specific moment demands. The first dimension is physical completeness. If any portion of your silver exposure is in paper instruments, ETFs, futures, pooled accounts, allocated but undelivered metal, this is the moment to address that. The recognition phase is precisely the phase in which counterparty risk becomes most real, in which the divergence between paper price and physical price becomes most dramatic, in which the investor, who thought they owned silver, discovers that what they owned was a promise about silver. Convert to physical. Incrementally, prudently, as quickly as is financially practical. Make your silver reals in the most literal sense of that word. The second dimension is security completeness. Your physical silver is only as valuable as your ability to maintain access to it and pass it to your heirs. Review your storage. Is it adequate for the current value of your holding? A home safe that was appropriate for 100 ounces may not be appropriate for 500. Is your silver insured? And is the coverage current and accurate? Does your family know where it is, how to access it, and what to do with it through clear, legally valid instructions? A will, a trust, an explicit letter of instruction? The silver you have built is a legacy. Secure it as one. The third dimension is knowledge completeness. The recognition phase will bring volatility, dramatic price swings, both upward and downward, that will test the conviction of every holder. The investor who holds through a 30% correction because they understand deeply why they hold will emerge with their position intact and their conviction strengthened. The investor who holds through a 30% correction on the basis of a vague feeling that silver is a good investment will capitulate at exactly the wrong moment, selling into weakness and missing the subsequent move that their years of patience had positioned them to capture. Know why you own silver at a level of depth and specificity that no short-term price movement can disturb. Read. Continue learning. Make your conviction knowledge-based rather than feeling-based. Feelings fluctuate with prices. Knowledge endures through them. The fourth dimension is proportion completeness. Review your overall portfolio in light of the specific forces we have discussed today. Is your precious metals allocation, your physical gold and silver combined, proportional to the magnitude of the monetary and industrial forces now aligned in their favor? If you have been conservative in your allocation because the thesis felt speculative, consider whether the evidence available today changes your honest assessment of how speculative it actually is. The convergence we have described, the simultaneously active monetary, industrial, and monetary recognition forces, is not speculative. It is measurable and documented. Position accordingly. The fifth dimension is community completeness. And this sounds different from the others, but I believe it is genuinely important. The recognition phase of a major investment thesis is a period of significant social pressure. As silver's price moves, media attention increases. The conversation becomes louder, more emotional, more subject to manipulation by people with specific agendas. Both the enthusiasts who will tell you to bet everything and the skeptics who will insist the move is over just as it is beginning, having a community of serious, thoughtful, evidence-based precious metals investors around you, people who share your level of understanding, who you can think out loud with, who will challenge your analysis without undermining your conviction, is not a luxury. It is a practical necessity for navigating the recognition phase with the calm and clarity it demands. I want to stop for a moment and speak to something that I think is almost never discussed in financial content, but that I believe is the invisible foundation of every genuinely successful investment journey. It is the relationship between financial preparation and personal freedom, not freedom in the abstract, freedom in the specific, daily, felt sense of the word. The freedom to make decisions about your work, your relationships, your time, your community, from a place of genuine choice rather than financial compulsion. The freedom that comes from knowing that your family's well-being does not depend entirely on the continued smooth functioning of systems that are, by the honest analysis we have been conducting today, under significant structural stress. I have spoken with hundreds of people over the years who have built meaningful precious metals positions, and when I ask them what the most significant change has been in their lives since they began building their hard asset foundation, the answers almost never begin with money. They begin with feeling. They describe a shift in how they carry themselves, a loosening of a chronic background tension that they had been so accustomed to that they had stopped noticing it. A new quality of presence with their families, with their work, with the future, that comes from having done something real in the direction of genuine security. The silver they hold does not just represent a financial position. It represents a choice. The choice to take responsibility for their own financial well-being rather than delegating it entirely to systems they do not control and institutions whose interests may not align with their own. That choice, made and reinforced every month through consistent accumulation, builds something in a person that goes far beyond the metal in their safe. It builds the financial character that makes every subsequent decision clearer, more grounded, and more aligned with who they actually are and what they actually value. And in a world that is urgently asking every person to clarify what they value and to act accordingly, that character is perhaps the most important asset of all. Let me give you the single most important insight of this entire conversation. The insight that, if you carry nothing else from the next 30 seconds, is worth the entire time you have invested in being here today. Most investors are missing the silver revaluation, not because they lack the intelligence to understand it, not because the information is hidden from them, not because it requires expertise or access that they do not have. They are missing it because they are waiting for permission. They are waiting for the moment when enough mainstream voices have validated the thesis that acting on it feels socially safe. They are waiting for the coverage, the consensus, the comfortable feeling of doing something that the people around them are also doing. And by the time that permission arrives, by the time the silver revaluation is being discussed on mainstream financial television, by the time the neighbors and the co-workers and the conventional financial advisors are talking about it, the fundamental opportunity will have passed. The price will reflect the recognition. The window will have closed. The people who waited for permission will be paying the price of what the people who acted without it built during the window. Permission is not coming before the window closes. It never does. The greatest investment opportunities in history have always, without exception, been available before the permission of mainstream validation arrived, and gone or dramatically diminished shortly after it did. The investor who understands this acts not in defiance of the consensus, but in recognition of the timing structure that governs every major financial opportunity. Early movers are rewarded. Late followers pay the early mover's exit price. You are positioned to be an early mover. The recognition phase is beginning. The window is open. And the only permission you need is the permission you give yourself. The permission that comes from honest analysis, honest risk assessment, and the honest acknowledgement that you have done the work and the work says, act now. So here is what acting now looks like in the most practical, specific, executable terms I can offer you. Today, before this video is 24 hours old, do one concrete thing. 1. Choose the most urgent gap in your silver and gold architecture: physical conversion, security review, allocation increase, estate planning update, or community building, and make one specific move toward closing it. Not the whole gap. One move, book the appointment, make the call, place the order, write the first sentence of the letter of instruction, send the message to the person who should be part of your financial community. One concrete action taken today that transforms this conversation from something you heard into something you did. This week, extend the action. If your allocation is below where honest analysis suggests it should be, set up or adjust your recurring silver purchase. Not a dramatic number, a sustainable number, a number that you can commit to without financial stress, that you will maintain through volatility and distraction and the 100 other demands that any given week will place on your attention. Consistent, modest, automatic accumulation is the strategy that has built more precious metals wealth for more ordinary people than any other. Make it automatic. Remove the monthly decision. Let the system work. This month, complete your architecture review. Work through all 5 dimensions: physical completeness, security completeness, knowledge completeness, proportion completeness, and community completeness. And address whatever you find. Not perfectly, not all at once, but with the systematic attention of someone who understands that the recognition phase rewards the fully prepared and forgives no significant gaps. And from this day forward, hold with the conviction that knowledge produces. Every piece of analysis we have discussed today, the Buffett precedent, the Neumeyer supply argument, the 3 converging forces, the paper versus physical dynamic, the historical pattern of revaluations, is a piece of the foundation of an understanding that no short-term price movement can undermine. Build that foundation. Add to it. Let it be the thing you hold when the volatility comes, when the doubters are loudest, when the market tests your conviction in the way that markets always test conviction before rewarding it. There's a moment that comes in every significant investment journey, a moment that is impossible to predict precisely, but that, in retrospect, everyone who was present for it identifies as the turning point. The moment before the recognition became undeniable. The last morning of ordinary prices before the move that defined the opportunity. The quiet Tuesday when the stacker went about their day, checked their holdings with the measured satisfaction of someone who had done their work, and did not know that they were hours or days away from the moment when everything they had built was about to be recognized by the world for exactly what it was worth. I believe we are very close to that moment, not because of a specific price prediction, not because of a specific date or event that I can point to with certainty, but because the convergence of forces, monetary, industrial, and monetary recognition, that we have described in careful detail today, is not pointing toward that moment. It is producing it, actively, measurably, in real time. The question of whether you are fully positioned when that moment arrives is the question this video has been asking from its first sentence. And the answer to it is not determined by your intelligence or your luck or your access to some privileged information. It is determined by what you do today, and tomorrow, and in the weeks and months that remain in the window that is open right now. You came here because you are a person who takes this seriously, who understands that financial preparation is not an optional activity for people with extra time and extra money, but a fundamental responsibility of anyone who cares about the quality of their own future and the futures of the people they love. That understanding is a gift. Not everyone has it. Not everyone will develop it before the window closes. But you have it, and the only question history will ask is what you did with it. The ultimate silver revaluation is here. Most investors are missing it. You're not one of them. Act accordingly. 3 things before you go, and I mean every word of them. The first is a like, because this conversation, if it gave you something real, deserves to reach the people who have not found it yet. The algorithm responds to your signal. Your like is a vote for serious, grounded, honest financial content in a media landscape crowded with noise. Cast it. The second is a subscription, because what we have discussed today is the beginning of a conversation, not the end of one. The recognition phase of the silver revaluation will produce events, data releases, policy decisions, and market developments that require context to understand and conviction to navigate. I will continue to provide that context. Be part of the community that receives it first, with a full framework to make it meaningful. And the third is a share, with one person who deserves what you just received, the friend who has been wondering about precious metals but has not yet acted, the colleague whose financial anxiety you have been watching quietly and wishing you could address, the family member who trusts your judgment. Share this, not as a prediction or a guarantee, as an honest, serious, well-reasoned conversation about a real opportunity that real people are building real security from, and that deserves more people to hear it. The revaluation is here, the window is open, and the version of you that exists on the other side of acting on what you now know is a version worth building toward. Start today, continue tomorrow. Let the work compound. That is the whole instruction.